Hello, ladies and gentlemen. We'll first go into what we think is happening in the markets this next week. Full disclosure, I have absolutely no clue. Last week, I had a little bit more of a kind of a thought process as to what was going to happen. I was relatively bullish because of a lot of delta pressures and hedging going on. Now I have absolutely no clue what's going to happen to the week ahead. I hopefully I want VIX to get crushed, and I want to pick up some more puts. GME wise, I don't know either. I think we'll probably drift down going into earnings just because we didn't have a ton of delta pressure being put on onto the to the market makers for Tuesday. So I don't see a reason why we'll go up until the shareholder meeting. So I'm relatively bearish shorter term on GME and wait until the shareholder meeting. So I honestly have absolutely no clue what's coming. Justin, what do you think?
Yeah, so market wise, I don't know. Like I feel like I note that Bitcoin closed down for the sixth or seventh week in a row. I should have printed the article. My point though is this: is that I find that there's an interesting correlation between the markets and BTC and not just equity markets, but I think where Bitcoin goes, so go the alts. So I find that to be interesting. As far as GME goes, my guess is, and like the way I'm positioned right now is I'm positioned from a bearish stance on it. I think my guess is, and my investment thesis and where I'm positioned now is that it will go back down. If it does go back down, I'm certainly going to be reloading myself with shares and options, at the, or what I hope will be the bottom of that. And that's an anticipation for, the run that I suspect will come. Like after the 17th or the week after the 17th. So that's my take on that front. As far as the market in general, I mean, right now we've got, Josh, I just don't know what to make of it. Oddball things that might affect it is I'm curious to see where this monkeypox things go, or if we've got a new.
I don't think I think monkeypox will die over pretty quickly.
Yeah, or the way I would kind of amend that is that whether it's a real thing or whether it's not a real thing, forget that. The question is will people perceive it as being a real thing? And to your point, if it dies over quickly, then we can just flush it out of the system and worry about other things. But I just throw it out there. If things escalate abroad, geopolitically.
It seems like all that shit's miling down too. I mean, I'm still relatively bullish on the stock market, very, very short term, just because it seems like everything's already priced in. Besides the recession that I think is going to hit, everything else, the market seems to price in. I mean, the market's already starting to price in potential rate cuts going out into the future. I mean, we've seen pretty much peak rate hikes. I still think the Fed's going to raise rates until something breaks, and I'm still very, very bearish on the stock market. But I don't really see anything that's going to give us the next leg lower yet. So I'm positioned pretty long right now, but that's more so because it's more of a tactical long with mainly some shipping companies because they're just producing so much cash flow. But that's like it's like there's just a very tactical stance right now. I'm starting to load back up on cash, getting very, very ready to put a massive position size on GME going into this next upcoming cycle. I personally don't know the intertwines of the markets well enough to know if they will be able to push off these obligations like they could in the last cycle. So I'm not going to take any risks. I'm going to derive a big chain of options going through many months and many different strikes and different deltas just to position myself to kind of hit all angles of this potential quarterly run up. If it's going to be MOAS, I want to be positioned for that, but I'm not positioning myself as if this is MOAS, because for all we know, for just the sakes of it, we think this will just be a quarterly run up.
Yeah, and the other thing too is that like even if let's say this actually is the with quad watching coming up on the 17th of June, even if that is enough to actually like kick MOAS into high gear, we've got the entire I'm not going to say it again, but you have the entire runaway event. That also is to say that what if the SEC comes in, freezes GME for 10 or 10
yeah, what happens to your options then? You don't want to have like an early August expiry on these option positions. Like I'm going out till at least like minimum September. I mean, like most likely I'll go into maybe even October, November, January, just because I'm fine paying the premium up front, because when these things start to run, you just make so much money because implied volatility on GME is higher than virtually any other stock. And that's why it's the most tradable and profitably tradable stock ever, because you're trading volatility, and that's what you need everywhere. So let's just get into this first question from Brexit. I've been off the grid for a few weeks. Hope you've been well. Did you manage to look into the executive order 4032 and executive order 3959?
Yeah, I did. So here, hold on. Let me give me a second to share my screen here. So basically, what it is that it, or at least on the surface, and remember, like I am doing my best to like poorly understand this here. So here's a list of. Give me just a second.
Oh,
Screen
sure.
share. Thanks, Josh. Let me see if I can make this big so people can.
Terrible. You can't really see it too good.
Hold on. One more second here.
Well, he's going over that. I'm pretty sure what he is talking about is just the Chinese leverage thing that's going on. I don't know it too well because I have not been too concerned with it, mainly because there's been so much time for this to play out. I don't think it's going to play too big of a role, if any role at all. My reasoning behind that is mainly because I think the way, if we are correct about everything, then the way these guys are primarily going short is through repo bilateral agreements, which is just basically telling two different parties to, we'll stick by the rules and all we have to do is agree upon each other and we will kind of settle at the end of the day.
Yeah, and so kind of along those lines, like my suspicion is that when the next major event happens, which of GME will probably be a part, or MOAS will probably be a part of, probably not exclusively MOAS, it's going to be a collateral shortage. That's my guess. And so anything, and this is, I think, to Brexit's point, anything that adjusts or anything that impacts the collateral, or how collateral is viewed, or that might impact how collateral is viewed, I would see as destabilizing, the system. That being said, like, when you just kind of scroll through these companies, it's not like you have like banks, or at least I don't believe you've got banks on here. It's just kind of what you would expect, military and military industrial related companies, whatever, from the Chinese sector. The thing is, I don't necessarily know like how much commercial paper are American firms using for a CINA or a China National Offshore Oil Corporation. So I guess here's the takeaway. There probably is an impact, but my guess is that the impact has already been priced in. Now, it's also important to note too that you have, whenever these things were supposed to go live, you suddenly saw spikes. So I'm not necessarily blind to that fact either. But to your point, Brexit, I think it's interesting, and I think the way I approach it is seeing the collateral question, specifically seeing what's going to happen or what potentially might impair it. I don't think this is going to catch anyone by surprise. And so if it's not going to catch anyone by surprise, I would assume that people have already, or firms have already positioned themselves out of it.
Maybe,
I don't even know.
Maybe not. I mean, maybe this is sort of MOS. I just have absolutely no clue. I don't have an edge there. And I don't think Justin does either. But this is just pure speculation.
Yeah. Josh, one of the things, too. So, again, Blurred short out to Pi Fight. If you're not watching his streams, for God's sakes, make it a point to at least watch the end of the day wrap ups. But at the end, or close to the end yesterday, we were doing, or as he and some other people were doing some looking into what collateral the OCC was using, in particular, like, does the OCC actually require shares to be held? Because if you could deposit cash in lieu of shares, then you might have a bag holding situation. And it was basically resolved that the OCC, no, like you actually have to have shares, on deposit, if you are short, or if you have written calls, or have sold puts or whatever. Or, well, definitely written calls. I guess there would be. I can't do it on top of my head for the puts, but I thought that was particularly interesting for that one.
Oh, Justin, you're going to love this question. We're going to skip ahead and then we'll answer the next one. Justin, have you ever been to the Hyatt Zillow, all-inclusive properties, one of my favorite spots for a team in Hyatt Points?
Like we were just talking about that, or Josh and I were just talking about that a few weeks ago. No, I've never been to that one or to the other one. Jamaica? No, yeah, so it might be the one. So like, there's two all-inclusives with Hyatt. One of them is for like families, and one of them is for like adults only. And I always get them confused with which one's which. But the ones that are adults only, there's one in Cancun and there's one in Jamaica, and I think for the families there's one in Cabo or Puerto Vallarta, and there's probably also one in Cancun too. But no, the Hyatt I really want to check out in the Caribbean is I really want to check out the Part Hyatt. I think it's in St. Barth's. That's on my hit list of places to visit post MOAS.
All right. It's COVID's fault. It's money. Yeah, I mean, there's so many random ass things that they're just going to continue to spin in the media. I don't really know. It's hard. I mean, I was having a tough time sleeping the other night because my city had a citywide walkout of school where they were chanting for protesting against gun control, and everyone was just chanting, peace, peace, peace. I mean, like walking NPC zombies where they completely are missing their what intentions and reality are. I mean, everyone wants peace, but doing something that is almost going to be counterintuitive to that action is just complete and utter nonsense. So
it's always eerie when you see people who have their opinions assigned so decisively to them. Scott Adams would say.
Oh, the Zilrow was in Cancun. Maybe that's one that I was going to go to.
Yeah, it's also, yeah.
Yeah, so this is going to be a pretty chill stream. I mean, I really am. It just seems like there's not many people. People are pretty busy on their holiday.
It's Memorial Day too. Yeah, actually, I've got another buddy over here. Just a side note. The suspension. So I do a fair amount of driving, and I'm to like I think 170,000 miles on my car, and like I should have replaced my shocks.
Your car drives yourself. It drives itself. Justin.
It drives up into a wall. Anyways, yeah. So I was like, the shocks had maybe useful of like 100,000, and I'm at like 170, and like the suspension was getting a little rough. It was a little busted out, and so I refused to be bent over again by the manufacturer, so I said, screw it, I'll just do it myself. And I've got a buddy over here who's pretty handy.
Do it yourself, you mean I'll take my little slave man and Nathan can do it.
No.
I hope he's hearing this. Shit, I don't know. I mean, it seems like we'll just bust open the jar and talk about our feelings. So, I guess I might. George called me, and I guess I might need to fly over to Arizona with him for the next few weeks. And he has a bunch of trucks, and he wants me to flip them for him just for fun. And he thought it would be a pretty good experience. And then I need to drive from Arizona to Miami and carry some banners in a truck down there for who knows what. For his Rebel Capitalist Live. So I'm basically his Nathan. Yeah. Still bullish on Chippy? Absolutely. I'm not looking for leaps. No, I play them relatively shorter term. I mean, I some of these companies right now are trading so ridiculously under their NAV. Like right now, DAC and which is Davio Shipping. I mean, I just with their actual fleet of ships, they have more money in their ships right now than their market cap, and they're making so much ridiculous cash flow. I'm expecting some share buybacks in the future. Right now, we're kind of going through a tougher time, but I mean, they're still doing pretty well. I have a lot of options on them as well as Zim. I trade in and out of Zim very often. It's just because they're so volatile. Like they'll run up like 20-30% in a week or two, and then I usually just sell, and then I'll wait because they'll usually come back down another like 10-15%, and then I'll just re-enter. I mean, like they are just so ridiculously volatile.
Josh, do you think I should pick up some options?
No. I almost paid Justin not to pick up any options on any of these companies, because if we both put on the same trade, there's a certainty that it will fail. Moab start June 3rd. We were just kind of talking about this. I don't think so. I don't think there's too much the leverage.
Yeah, so actually here, let me share this thing right here. So like this is the this is market chameleon move, right? And so it would be through the end of day Friday. End of day Friday in this regard. And so like here's the takeaway is that even though of course you did see a run up, a very nice run up.
Actually I lied. Moaz will start on June 3rd because All Nighter Hider is leaving for Alaska.
Yeah, and you're shaving your head too, right? Or at least half your head.
No,
Josh, I don't understand. Why are you so selfish? Whatever. Anyways, but yeah, so there was definitely this nice run on GME this past week or whatever, right? But when you look forward to next week, I guess you would say, and I hope I'm getting this right here, the gamma ramp that you would need to continue the positive feedback mechanism, it's not there.
Just usually when we have a lot of call buying and a lot of options expire in the money, we'll have a lot of delta hedging that needs to be done on the first day of the week. We don't see that because there's more puts that actually expired in the money than calls. So there's actually a negative delta pressure, which is going to provide downward pressure on GME instead of upward momentum. So it's just
and actually
a whole lot of bullishness there. Oh wow, BBBY actually looks really good though. Not too great, but it looks good.
Yeah, so here's a question for people in the stream. Like, is anyone else doing a BBBY? A Bobby? No. A Bobby play?
I'm not. Justin is, so that means it's good for all of you guys to go for it. So you can fuck around with that. I'll get to the next question. Do you guys have an opinion in if the defaults of the Chinese high-speed rail and property developers will bring on margin calls, possible catalyst, or will it be priced in as well? Did something new happen, or is he talking about Evergrande and kind of everything that was going on with there? I have not heard of the speed rail. the Chinese high speed rail. But the property developers, that is going to, I think, have negative demand for commodities, because those were really a lot of demand for commodities was due to these property developers. And if those are starting to go bust, I'm hoping it takes a hit on commodities. If that's the case, I would love to load up on more, because I'm an extraordinarily bullish long term on commodities, but they're still just a little too overpriced for me.
Yeah, and so let me add one other thing too on this front. It's like John, though, like this isn't going to be like a very good answer, but this might be kind of like a way to like frame it and think about it. Like, I don't know, or let me go with this. Probably not like directly, but one of the things that I think we're seeing is that as we have grown more interconnected, we have more complexity. And with complexity, there are like these hidden linkages that exist. I think, like commercial properties or whatever. And so even if, let's say, I don't know, if, the Chinese or whatever, let's just say like some property, some small time, or like some mid-firm, property development, tanks in China, and the PRC doesn't bail them out for whatever odd reason. And let's also say that this guy that tanks, or this firm that tanks, let's say that there's no international exposure to it or whatever, right? Because they just never floated anything on the international market. So in that particular situation, China might be able to contain it from that. But if that thing impacts something else, which then impacts a third thing, and that third thing hasn't been properly managed out because there's this weird ass relationship between this fourth thing over here, that's where the problems like arise in this. And I love going back to this, and I'm not sorry to repeat myself here, but think like LTCM blowing up in 98, which actually started in Asia in 97. And so it's one of those things. Oh, maybe here's a way back up. Here's the way to think about it. It probably won't be like happens, bam, everything's done. But it might start, the chain reaction. It might light the fuse that hits one other thing. That
if it's a possible catalyst, and it's absolutely possible, because if that does cause some margin calls elsewhere, that definitely could be a catalyst. But as of right now, I'm not really seeing too much of that. I don't know what probabilities I would weigh on that, because I don't have a huge edge in China. But it is something that I do watch, and as the contagion spread, that could pass on to more and more European and US firms, which could cause some more and more contagion.
Yeah. And I would say, like, pay really close attention for anytime you hear the word collateral or anything like collateral coming on the news. Like, just zero in on that, mentally, and see what's going on there.
When do you think the rush for dollars and dollar equivalents from the European debt market stop and reverse the risk taking? Basically, I think the question is, when will we kind of stop Brent Johnson's dollar milkshake theory when everyone needs dollars? I would say it's either going to be a long process because there's so much dollar denominated debt, and we'll either continue this long cycle of the dollar being relatively high, or we see a situation where something breaks in the market, and then the government and Fed provides way too much liquidity, and people no longer want these dollar assets. But I see the former as the more likely situation, because there's such a demand for dollars, and it's a long process of a currency losing its world reserve currency. I just think that's a longer process where people start to take on other debt. You know what? And they'll start to trade, instead of trading commodities for dollars, they'll start to take yuan. Maybe they'll start to take some other currencies as well. They'll some rubles, and people will slowly kind of get off the dollar system and start transitioning into something else. I don't know if that'll be a quick process or a long one.
Yeah. And maybe the other thing I would say on this front is that, like, unless I'm reading or understanding your question wrong, especially when you say right here and reverse the risk taking, I view people going into the dollars as they are reversing the risk taking. Yeah. So
Phil, he has BBBY leaps and holding several hundred shares, hoping to sell CCs after. I mean, I think that's perfect. Yeah. Like selling calls, I mean, Justin, that's probably been the most profitable thing for Justin.
We've got to be careful. We have to be careful with that.
Recently, when you're down, like 1,200% or something ridiculous, like 100, I don't know. It was ridiculous.
Yeah, this is why you always want to set a trailing stop limit. So, Justin.
That is good, valuable lesson though. Like, set stop limits on these, because when a run does happen, you're going to eradicate all gains on those covered calls and get extreme losses. So having stop limits on those are just wildly important. So thoughts on a digital currency? A CBDC, sadly, I mean, Davos right now with the World Economic Forum, they are hammering down on a CBDC. I mean, George made a whiteboard video on it, and I have to explain his whiteboard videos for something else. So, like, they are really, really pushing this pretty hard, where basically the IMF wants to have their SDR as the basically they want to be the central banks of central banks, and everyone in the States have an account with the Fed, everyone in Europe has an account with the ECB, banks kind of get eradicated, and everyone just kind of transacts directly through their central banks. The reasons why this is so bad, because first, there's a humongous lack of privacy, and if you want to take out loans, usually the most productive loans are from these small banks going to these small and mid-sized businesses, and there'll be a much less chance that you get a loan if you're a super small business, especially if you are not following the quota on the woke mindset. And there's just a lot of risks for it, but I do think it's coming, and being prepared and not wanting something to happen are two wildly different things.
Yeah. So I would say like three things from that. Digital currency is certainly the future. And even though we're in the present, we are not yet in the future. You know, the present becomes the future over time. So I think that that's part of it. I think that whatever we see, like what's going to kick this off? Earlier we mentioned that the scramble for collateral. Why would people scramble for collateral? Because there's a crisis of confidence. And so you've got to have something like when confidence is lost, there's got to be something to re-inject confidence back into the system. And if you're going to use like a algorithmic stablecoin on steroids, which is what which one could argue what the SDR is. Yes, I know there's a little bit of gold in there, but just hear me out. I don't know if that's going to be the easiest sell or whatnot. My guess is that what you're going to see happen for whatever new currency that exists, number one is I do not think the United States wants the local unit of account to be the world reserve currency. Yes, there are benefits that we accrue, but there are also tremendous, this is Trevin's dilemma right here, tremendous costs that accrue on that front. So I think you're going to see something that is actually like a true reserve asset. Think like, Ken's Bancor back in the day. My personal guess is they're going to piss off the Bitcoin maxis, but whatever. I think it's going to be XRP. The reason I think it's going to be XRP as a reserve asset is because XRP is quick and it's cheap. That is to transact and to send. That's not to say others won't exist. Certainly they will. But in terms of being able to do this or whatever, right? The second thing is that I think you're also going to need to have the ability to specify counterparties. Because that's going to be one of the, again, if there's a collateral crisis that blows up and people get, panicked and freaked out, being able to say, okay, listen, I'm willing to trust $1 from Bank of America, but I'm not willing to trust $1 from Chase or whatever, right? You can do that with crypto, and more specifically, due to the XRPL, there's some very specific permutations you can put into that. And lastly, if you are going to see a deglobalization trend, which I think you are going to see, think like Russia, India, China, and like the U.S., Canada, and I don't know, like Mexico, whatever, right? They're still going to trade with one another or whatever, right? So you still need to have commerce going between these two things. And so you've got to have this, way that you can have an internal like CBDC, but at the same time have an external permissionless, trustless asset that can go between, like if North Korea and Iran want to transact with one another, they should still be able to transact with one another. And the fact that they use dollars is like ludicrous, like just doesn't make any sense. And so this is where I think you need this third, this truly neutral asset, and then within then linking into the neutral asset, you can then build in the local CBDCs. And so if you want to have a very authoritarian state, China, or you want to have a very open state, I don't know, like the U.S. or hopefully the U.S. That's how I think you could do it. So that's a long answer question.
And also, XRP does have ties with the WF. They're guys.
Ripple is balls deep.
Do you have an answer?
Love it or hate it.
Bitcoin is faster and cheaper than XRP. I mean, I think that's just false.
No, so my response on that one, the reason I say faster and cheaper is that the XRP ledger will settle in 3 to 5 seconds. In Bitcoin, it takes about 10 minutes roughly, for a block to be mined, and then there's the transaction time. I mean, this is I'm setting aside my own personal feelings on it, but just like from a practical standpoint, cheap and quick will always beat slow and expensive. That's not to say these are mutually exclusive. But
I mean, gold is slow and it's still wildly used.
No, it's
store value. I personally am not an extreme XRP bull like Justin, but because he's like, there is a chance that something like that does happen. So I would play it personally. I hold no cryptos right now because I'm extremely bearish shorter term, but keep going.
Oh yeah, and like the thing is too is like just because what's the old phrase, like hate the game, not the player. Like when you look at Garlinghouse, the CEO of Ripple or whatever, right, and you see the banks that have been signing on, like this is the way the wind's blowing. Now, whether you like it or not, that's irrelevant. The question is how do you best position yourself to have the most options and the most freedom going forward? So there's that.
What brokers do you guys think is safe? I mean, I prefer and safe are two wildly different things. I love Webull, but do I think it's safe? Not necessarily. Well, Webull, they make it very easy.
How do you say it, Josh? Like, what was the first things you said to me? Like, because they make it so easy for
Yeah, they make it easy for 19-year-old kids to leverage up 10-1 and play the casino. So I do love playing the stock market, fellas, but Do I think Eagle's the safest brokerage? Definitely not. That would be the Fidelities, like the big names. I mean, like everyone knows them, but preferring wildly Weevil. I mean, like watching Justin use his Fidelity hurts me because
it's so boomer. Yeah,
yeah. I mean, the functionality on it's horrible.
Yeah, and actually, like, here's the thing: like, out of all the boomer tier brokerage, so like the big ones, what Fidelity, Schwab, Vanguard, IBKR to an extent. The answer to the question probably is that you probably want to have multiple brokerages already set up. That's probably the safest answer because nobody quite knows. I would look back to what happened in 2021, seeing which brokerage shut off the buy button. I don't, Josh, correct me if I'm wrong, but and someone in the comments, call me out of a misremembering here. I don't think I don't think Fidelity ever turned off the buy button for GME, but I think anyone that was using Apex Clearing, it was Apex Clearing, I think, that shut it down.
And Weevil does use Apex Clearing.
Yeah, and even I think Schwab, and that caught me off guard. I would not have expected Schwab to do that. But anyways, the answer to the question, what you can do right now, have multiple, and don't wait to the last minute to do this, but have multiple brokerages established. If you play options, make sure you've got the option, whatever, at least I guess 2 or whatever enabled at the various things.
We have a new video. Can you guys use that video explaining the Greeks in your fund kind of way? Yeah, I mean, maybe we do that tomorrow, Justin. We'll try. Fuck it. Yeah, tomorrow. We'll try and make one tomorrow, which would probably be up in a few days. Hey guys, love the stream. Thank you very much. Could you elaborate on the decision-making process you use for GME calls, strike price evaluations of Greeks, IV, etc.? I mean,
Josh, I can take this one. I can really easy. I take the money I have and I think, how can I best lose this? And then I YOLO into crazy option plays. And once I go red and down to 0, I think my work here is done. Josh, your take.
I also have some JN950s because when I obtain my leaps, I like to go extremely far out the money, mainly because what I'm looking for is to capture a MOA style event with that position. Yeah. So I continuously roll those super long-term positions. But when I'm trading GME, I look for open interest. I mean, that is very, very key because if you don't have a bid ask for when you're trying to sell and you don't get filled, it doesn't matter how much you're up. So you always want the volume to be there, especially if you're playing with bigger money. I mean, if MOAS does happen and you guys are sitting on a lot of money, you have to be very, very careful on the open interest on what you're buying. Because if you're one of the only guys playing with, I mean, if there's an open interest of less than like 100 or 200, it's going to be tough to move. I mean, you're going to be literally moving the market when you use that position. So I'm mainly looking at open interest, and that's pretty much it. Sometimes I look at is that Nathan messing with your car?
Oh yeah, I can shut the door. Yeah, sorry, if like it's distracting, just let me know. Yeah, so what I would say is for the 950s, like I have a pretty large position in 950s.
When he says large, like he's you could tell his number if he sold out of those 20,000.
Yeah, I'm not quite. Or wait, yeah. So yeah, it's I guess would be material on that front. But so here's kind of the way I think about it is that for my case, so if you see my screen right here, you see this 20,626 whatever, right? This shows this huge pile up of people who have bought these 950 calls, and this is for the January 2023. I think it's the only 950 that's open right now. And then you can see some other things. So like you see there's some action at the 500 is what it looks like. Going closer to the strike price, you can see some other things piling up, but to the point of, hold on, let me pull back up the question here. What was the
what do you look at when you're buying options like that?
Yeah. So when it comes to MOAS, whatever, right? For the 950s, my goal would be I would want to exercise those, but to exercise those, you would need GME to be in the money. So it implies GME is going to be more than 950. So during the next run,
I mean, you would need that to be at least worth like 2,000 to 3,000 before you start exercising, because if not, you're really going to have like no shares.
Yeah, and the other thing too is because it's so far dated into the future, or at least for the time being, the volatility, like a small spike, causes this massive change for the upside in the options contract. So probably what I would do for my case is that I would probably take maybe 10 to 20% of my position off the table if I could recover my cost basis. Because my attitude is once I've got my money back, it's much easier to kind of let these things roll or whatnot. Now, that being said, so that's kind of like long-term, MOAS capture strategy. The short term, like for playing like quarterly cycles, is if the August contract is open, actually, I take that back. August is attractive, but I would probably take a page from your book, Josh, and go for September. I would probably, if GME goes back down this week or the coming weeks, or before, the the 17th, I would probably start buying on the way down, particularly after, if it gets beneath 100. And I would probably buy options that were relatively close up the money. And the reason, as Gmi would go down in this particular scenario, and the reason I would do that is I would want enough time to not only wait for the price appreciation to happen, particularly if the shorts figure out how to kick the can, once more, or if there's regulatory interference. But I would want more time on the options, and also on the way up too. I would probably start. I would have kind of like this like 80 call, $85 call, $90, $95 call, or whatever, assuming the things were liquid enough, and then I would probably start selling the options on the way up. And then depending upon where we see this is going to go, that's why I would say, turn into Pi-Fi stream, because he's much more knowledgeable than I ever will be on this stuff. But that's probably what would guide me in saying, okay, listen, do I want to start writing covered calls? Do I kind of want to sit? Or maybe I want to sit on my options a little bit more just to see how far they can go up. But I like the idea of having like a clump of shorter dated options, like September-ish is my particular style, and then having, the big clump of January 2023 to capture, MOS. The other curveball is the Bed Bath & Beyond. Like, I have no idea what's going to happen with Bobby. Right now, if you want to play on options, like those, I think Nathan even scored some for like $60 or whatever, right? Like, he got a lead. Like,
I have no edge on BPBY, nor am I too concerned with it.
Okay. Well, it's cheap, yeah. So,
yeah, I don't like that word, but like relative to what? I mean, so was Luna a Ponzi scheme? I mean, they didn't even pretend to be backed by anything. They just said it was an algorithmic trading stablecoin. Like, what does that mean? First off, I mean, like, they're basically just telling you, just give us your money. So was it a Ponzi scheme? I mean, I don't even know if you can call it a Ponzi scheme. Like, it was probably worse than that, because like they were just literally an algorithm that people just trusted with their money. I would say Tether's a Ponzi scheme because they're telling people that they are one-to-one backed when in reality they really are not.
Yeah, and the other thing too is that I really want to see, like, I had nothing in Luna, nothing in UST, so I mean I'm not affected by this. But what I would ask is this: what happened with it was like $1 billion, Josh? Like what was it? The Luna Foundation Guard LFG? Like, what happened to the Bitcoin? Because I mean, like, you've seen some like There was some chatter. Like CZ on Twitter was, asking some questions too, and like he's got to walk a really fine line, in terms of, his role in this. But I would be very curious to see what happened with the collateral, the Bitcoin as collateral, because I don't. It's not clear to me where that went, and that's probably one of the real crime. Or if there were shenanigans, to be put it like this, if there was shenanigans to go on, that would be the place I would start looking, is what actually happened to the collateral that was supposed to secure the stuff. If it was used to defend the peg, show me the transactions, show me the wallet, or show me the whatever, show me the wallets that I went to, and the transactions. So yeah.
Does the XRP market cap does XRP have the market cap to replace SDR? Question.
Not at the current rate. See, here's the thing, right? Like, if you're going to have, like, I mean, like, back up. How much goes through Swift on a daily basis? I mean, how many trillions of dollars or whatever? Like, a big number. And like, if you're going to have, something like, here's a good way to think about it. I'll talk in terms of Bitcoin, because this probably goes over a little easier. If a home costs $1 million, you could buy it with Bitcoin if Bitcoin was 50 cents a piece. You could buy it if Bitcoin was $1 million a coin or whatever, right? It's just a function of how many coins do you actually need in order to process the transaction through. And so necessarily, if you have a system that has to absorb, these currency flows across the world, like you need a big market cap, because you don't want the market being moved by, relatively, normal small transactions. So there's a running joke in the XRP maxis, the XRP crazies, where XRP 2000, I don't know if it's going to get to 2000 or not, because that implies, I don't know, there's 100 billion XRP thingies in existence, or less than 100 billion XRP thingies in existence. So I don't know if it's going to get that large, but from a conceptual standpoint, to facilitate the transactions, whatever you're using as an asset, XRP, Bitcoin, it doesn't matter. You have to have a large enough pool where you can do like relatively large transactions without distorting the entire pool. Like, if you have like a kiddie pool and do a cannon pool and a kiddie pool, you're gonna like blow up the pool. If you do a cannonball into like an Olympic-sized swimming pool, there might be some waves, but it's going to be negligible or whatever. So,
that is little leverage compared to Forex and crypto. Yes, but if you do not know where the yield is coming from, you are the yield. And if Justin, what you do?
Yeah, my bad.
That is not to say that it's good. Like, should you be able to take out 100x leverage in crypto? No. I mean, in what mind should that ever happen? That's like that means if there's like a 2 to 3% move against you, you could get wiped out. I mean, it's just complete utter nonsense.
And scam wicks, are replete there
Yeah,
too.
like when you're allowed that type of leverage, like you are the product. Like they're making their money from you going bust. So that's like it's not to say it's a good thing, but like yeah, like Weeble's less than that, but it's not. That does not mean Weeble's safe. What's the best case scenario for the coming weeks to months? Currently holding Jan leaps and looking to grow my capital with June OPEX. Yeah, I'm feeling the exact same way, Colin. I think the best case is MOS, obviously, but reality. Let's say the shareholder meeting goes really, really well. We see a share dividend split, and that drives real interest to GME. Now we start to see all eyes on GME, and people are starting to FOMO into options. If they start to FOMO into those options, that can really start to increase the delta hedging of the market makers. If that starts before the June OPEX even begins, then that's going to drive an even bigger real OPEX and quarterly run than we've seen in the past. I mean, ideally, I like if we can get to like the 150, 200 range before the quarterly run up even runs, then we could see a situation where there's a lot of room to run, just because there's already, we're starting at such a higher point from any other cycle, and there's already interest looking at the stock.
Yeah, and I would also say this too. Like, note that we've got the higher sustained borrow rate. There was a post on Superstock earlier today saying that, there was going to be a run this coming week. Of course, there may be. My guess is probably not. But I do find it very interesting. Again, a huge hat tip to PiFi in this regard, that we're going into the cycle with a very sustained, we're starting at higher at the borrow rate. So there's that. And I believe XRT is still on Rake Show. So I mean, the traditional go-to, pinata you just whack, to get more shares. Well, there seems to be more friction if they wanted to do that. So I see that as a huge plus. Personally, like I said, if GME goes back down, and especially if retail can use this option, or excuse me, if retail can use a decline in the GME price for the coming, let's say 2 or 3 weeks or whatever, right, to either load up on shares if that's their thing, or load up on options, especially options if they get cheaper or whatever, that would be particularly interesting in that regard too. So I would view that as I would view that as a huge upside. I mean, that's my plan, right there.
Also, post MOS would dumping large amounts of money into the Vanguard and Charles Schwab's and letting them handle it be a bad idea. Well, that is to say, okay, the people with GME, they're making a ton of money, but every other person is losing a ton of money because their 401k is getting obliterated. All stocks are really falling down. So how much more money will they actually have? I don't know. It'll just be there'll be a small portion of people who make a ton of money and a very large amount of people who lose a lot of money. So I don't think it will really matter too much. And most of those people are probably just going to dump them into the bank account.
Colin, maybe this is the way I would approach it too. It's like, this is just me speaking for myself. Like I very much prefer to manage my own money. One of the reasons I love real estate so much is I can touch real estate. I can go up, I can touch a building, I can control it or whatever, right? And I guess if you're Warren Buffett, you can do the same thing with companies or whatever, right? But it's not to say that there's not a place in a portfolio for some autopiloting, but I don't know if I would dump a large amount of money into it. I mean, that's just that's just my take, me speaking for me on that regard. I mean, like Josh, you're much more active in picking out individual. I mean, Josh, do you have any ETFs that you sit on?
Yeah, but mainly like junior gold miners. I mean, there's still leverage on those, and I still use those ETFs with leverage through options, because my goal with my portfolio is to hit home runs, because I care about cash flowing businesses to make my money. Like what happens in my portfolios, like I truly don't care if my portfolio goes bust. That doesn't mean I want to go bust, but I'm using that portfolio as if I was just a strategic gambler. So going to the next question. What deltas ranges are you considering? Mainly higher deltas, because I like the higher risk to higher reward. I mean, basically the higher, let's say if you have a 1 delta, every $1 the stock goes up, your option is going to go up $1, and you have 100 shares, so that you're going to make $100 in that circumstance. So the lower the delta, the less money you're going to make per the dollar range going up. But if the stock is running and the delta will most likely be rising with it anyway. So I'll be probably just going decently far out of the money. Well, depend on what we're trading at. Let's say we get crushed. Let's say earnings are horrible and we get crushed. GME's trading back down around 90, 80, 100. And I'll probably pick up some like 150s, 160s, 170s going out to, I don't know, October, because I was just looking at the option chain. I don't really see any open interest on the September chain right now. So October, August, higher deltas most likely, just because the more the stock goes up, the more you will make. And every single time I buy an option on GME, I just write it off. Oh, I'll probably lose everything, but if I don't, then I'll make a shit ton.
Yeah. One other thing too is that, like, if you kind of think about it, I put in this is link in the comments, but this is the options profit calculator. If you haven't already used it, it's a great tool to kind of like play around and kind of see like, well, if this happens, what happens over there. But one thing you might want to consider doing, or this is kind of the way I play it, is that I've got like, again, like my long-term play, and then I have like some short-term plays. And with the short-term plays, I like having like kind of like multiple multiple avenues to go after it. So that's why I kind of like the idea, like if I get my way, or if we're fortunate enough, if GME goes back down, and let's say, numbers out of my backside here, let's say GME falls to like 75. Okay, great. You buy a few call contracts at, $75 or whatever, right? It's going to be, or on the way down, you keep buying, roughly at the money, options, but you buy them out for September. And I guess there would be a relatively high delta if you're buying at the money. But the assumption is that when it goes back up, you can start taking profit out of a portion of your position, so you at least have back your cost basis. And once you've got that back, you're kind of gambling with the house's money. And then depending upon how far you see it running, then you've got multiple ways to, multiple off ramps, from this, where you can exit out. So that's, I guess I would say is, I don't know if I would pick, and not that you would, but like I would think it probably is wise to have multiple strikes in play versus just saying, okay, listen, I'm going to YOLO it all into like 950, January 2023s or whatever. So.
All right. I actually really like this question, John Doe. I just had a thought. What would, in your opinion, be the best for humanity as a whole? A unified global currency, the fiat system we have now, or a wild west of 1,000 cryptos? I'll give a different answer, because this is what I think we did a video on this too. What would the ideal system be? Let's go back to the 1800s. For an entire century, we had 100 years of we actually had consumer price deflation. That means if you were born in 1800, and then let's say you were alive in like 1890, you would be paying less for goods and services than you were when you were born. And there was inflation in actual wages. So that means you were getting paid more and paying less. What was different in that time period than now? Well, that was when we had a free banking era, when absolutely anyone could open up a bank, and there was, thousands of banks. That was when I think the Wildcat, I forget the name. It was in
the Wildcatters, yeah, because the banks were out in the boonies because they never wanted anyone to redeem the money.
Yeah, that was in the Creature of Jack Island, I believe. But basically, there was so many banks, and that was when you had to be strategic. All right, what bank do I think is the safest? Leave it up to the individuals. And the banks, there's so many local banks, they were the ones that were providing to small goods and services, businesses. And they because they would go to high school, these people, they would know who's good for it, who's not. And that is when our society was actually the most prosperous, and we set up and had so many opportunities because of what our ancestors did in the past. So I think the best scenario for what we would have would be a free banking era, or we had many times more banks. Germany has the most banks in the world, and they have the most small and medium-sized businesses in the world.
What I would say on that front is, I would say kind of like maybe like all of the above makes sense. And so what I would do is, again, not to harp on XRP here, but I would have a neutral reserve asset that could be quick and cheap, to immediately send value. It's like an internet of value that you can like move between really quickly. And then from that, if you have a government that wants to launch a CBDC, you make the CBDC very easy to operate, with the digital reserve asset. And then let's say within a country, whatever, right? Let's say you have like, Bank of America issuing the Bank of America dollar or the Chase dollar or whatever, right? Then in that case, you can also start seeing through to the counterparties of the situation. So if you want to invest in like porn coin or whatever, right? Okay, great, you can do it, but at least you can specify like or whatever sleep project you want to invest in, or the bonk behind me. Like you can invest in whichever one you want to invest in, but you're able to say, okay, listen, I'm only willing to accept exposure up to this level. So I think the answer to that is that I do like the idea of having everyone on a centralized standard, but the centralized standard doesn't lock everyone in. Like when you send an email, like if you're in North Korea, theoretically, you can send an email to someone in Iran or whatever, right? And yeah, the email might go through like an American server somewhere or European server, who cares? But there's this standard, protocol of how to transmit data, across the internet. So I think that would benefit humanity for the dollar, or that would benefit humanity to send value from point A to point B. And then at the same time, if you can build in, whether it's a country basis, whether it's a trading block basis, whether it's just, a side project basis, and have, these various communities of value interact with other sub communities of value, I think that's a really, really interesting.
Decentralized. The best part about crypto is that it's decentralized for now. And I'm in the absolute free market capitalist maxi. And that's why I love the philosophy behind Bitcoin, but that does not mean I have to be long Bitcoin at all times. So Phil, I opened up some puts. I basically going short market and short ARK last and lost money. Just got my ass kicked in the bear market bounce. Yeah.
You're not the only one. You're not the only one.
No, for sure. Yeah, I was fortunate enough to be long the market this past week, but I will probably get my ass handed to me more times than that until this bear market's over, because I'm very bearish, as I'm sure you are as well. But I was just playing a strategic upside bounce. So the BTC was.
Yeah, so like right here, like this is the thing that, when CZ was doing those tweets, like asking for it, because like CZ, like from his role in Binance, could see like. CZ's the CEO of Binance. He can see like exactly what happened, but he can't necessarily come out and say it of what happened. But with the fact that he was saying like, "Hey, listen, guys, you just published this, might be particularly interesting." But yeah, I completely agree with you. Like there is something funky going on there. So.
How will it be possible to ever?
This is easy. Yeah, this is an easy one. So here, so let me play with options, but the same pattern is going to apply to, stocks, whatever, right? So what'll happen is that when you have a DFMU, a designated financial market utility, that will guarantee a trade, this is what will ultimately get you paid. So let's say like the OCC is a DFMU, the Options Clearing Corporation. So you have a bunch of 950. You have a bunch of 950 calls that suddenly go in the money, and you say, okay, great, I'm going to sell one option for cash, and then that cash we're going to exercise the remaining, 100 options I've got or whatever, right? So all of a sudden, the OCC says, okay, well, listen, we've got to deliver, 100,000 shares of GME, and if we don't have the collateral, we're going to do a call. We're going to do a collateral call on the counterparties, because the OCC will know all this stuff, saying, hey, listen, pay up. If those counterparties fail, I think this is where people are getting to. If these people fail to deliver the options because they run out of money trying to buy the shares to fulfill the option obligation, the bag ultimately ends up with the OCC. So you ask the question, how do you actually get paid from this regard?
And then the OCC has an account with the Fed. Fed sends money to the OCC. The OCC sends money to your account. So you will get paid. You don't have to worry about that. That is the least thing that you have to worry about. Shit has to happen.
Yeah. No. One other thing, if it's more like a OTC, or not that anyone here would be engaged in that, but you have like a bilateral trade, that's going to get interesting. That's where people are going to get like their asses handed to them. Yeah. But the point is that like,
it would be a big fist going down a very small noose.
Yeah. Or one thing, just from a technical point, whatever the DFMU is that has to deal with the bag holding, they will create an obligation. They will sell the obligation to the Fed. The Federal Reserve will transfer back bank reserves, and the bank reserves this is the printing of the money of the system that will ultimately happen. But that's the mechanism. A DFMU will launder bank reserves into the commercial banking system to close out the obligation.
What is stopping them from shorting under their exposure, just like in January?
So this is a good. So, Josh, you want to take this one, because I've got some thoughts here, but
no, you go. Then I'll foil.
Yeah, so Josh and I just did a video the other day on this regard, and so back up. This is a Ko-Fi for Pi-Fi, like to talk to Pi-Fi about this one, but this is what I think is going on. When you want to think XRT, when you have these puts that are on XRT, but when the puts are rolled forward, so this would be like an example of like can kicking. This is where you create, this pressure, because all of a sudden, if they can't do a put anymore, to say that we're not short, if they can't have a put anymore to cover their short position on XRT, then they have to return and build back the basket, which puts buy pressure on. I think this is how it works. Puts buy pressure on GME, sends the price up or whatever, right? Kicking the cans right there. With a quad witching date, which we've got of June 17th, for reasons that I do not understand, and it's even harder for me to explain, there are certain mechanics, like there's like these monuments that make it much harder, if not impossible, to kick beyond the state. And so it's kind of like a come to Jesus moment. Josh, am I right to say it's like almost like a mini, like predefined, I don't want to say like margin call, but it's like a pre-agreed net settlement period where people have to suddenly take a pause and say, okay, listen, where are we at? How much do we need to owe, or how much do we need to net out? What collateral do we need to put on deposit, et cetera? Josh and I have always talked about, this will end, or more or less will start when balance sheets are no longer able to be expanded infinitely, or if they just have to reflect accurately the liability of, the obligations they've accrued. And so I think, long-winded way of saying, back to your question, I'm sure they would love to kick the can, but market mechanics, for reasons that are hard for me to understand, even hard for me to talk about, make it much trickier, if not impossible, for the usual can kicking to go on. Now, that's not to say they might have other tricks up their sleeve, but my guess is the fewer tricks they have, the tricks that remain, they probably want to use less and less and less. And so, yeah, they might be able to kick the can, but if they kick the can here, if that creates a blow up, 2 or 3 days later, have they really won anything besides just 2 or 3 days? So,
I in fact do not smell like cheese.
Oh, you should ask him about his dry shampoo. Jesus Christ.
No, coconut. That was coconut. That sounds good. You said that. I write off my option cost too. Yes. Calculated gambling, same way I see it. Putin smells like farts. I've yet to smell him, but I'm sure he's a decent smelling fella. Yeah. So, what do you define as high delta? I was taught that 0.7 high delta. Yeah, I would say anything above like 0.6, 0.65. Yeah. I mean, I have a variety of options. Like I'll have some closer to at the money, some I'll go further out. I'm saying ideally there would probably be a lower delta on it if I was buying at like 90 and I was buying 150 calls, but I would expect those 150s to end up with a higher delta at the end. Yeah. The higher delta, I don't look at that too much just because I don't really care. I mean, I'm looking at open interest. Delta is going to go up or down. Like I do not make a decision on an option if based upon the Greeks. Really, the only thing I really care about is open interest, because that's all that really matters to me, is if bid ask is going to get filled. I'm mainly I just go for a variety of different options, but I would say my first choice is going to be the high deltas, which would be closer to at the money.
Yeah, PyFi oftentimes talks about, like, if you're writing covered calls, like I think he uses a 0.2 delta as kind of like a safe metric. In other words, you want it to be less than, right?
And Theta. I mean, just Phil was saying. I mean, I'm never like the closest I'll ever go is, I mean, maybe a month, but I'm ideally looking 4 to 5 months out, even if my trade is only going to be a 2-week span, because I do not want to mess with Theta. I would rather pay a little more, and I'll still have a variety. Like, let's say I'll have one option going 1 month out, and then 2 options going 2 months out, 3 options going 3 months out, and kind of I'll build a position around it. But I do not like Theta as messed with me more than anything else, and that scares me. Will Justin load up his Trek? Will he sell his Genie calls if XRP drops to 10 cents?
So I definitely will load up the truck.
You can just borrow against your metals, though. Like Justin would not need to sell any GME to really buy anything, because he has a really great leverage play on metals where he holds them, and then he can borrow against his metals at like a 7% interest rate or something like that.
Yeah, and actually probably that's like if I started taking GME gains, goes up to like 500 to 1,000, whatever, right? I suspect that the first thing I would buy if I wanted to like rotate out, or if I wanted to save my financial checkpoint, I would buy metals. But I also expect metals to be the first thing to go off, like physical delivery metals to be the first thing to go offline. So it's an interesting question. But yeah, I do have my eyes set on XRP, and anything beneath 20 cents, even 10 cents or if 10 cents very attractive beneath 20 cents. Yeah, I'm interested.
Yeah, LeBlanc. PyFi's theory does not take into account total return swaps, because you cannot see those, and they're untrackable. Those are those bilateral agreements that I always talk about, and because you cannot see those or track those in any way, shape, or form, it is impossible to put them into your theories and metrics, because what we can see is these quarterly run-ups. I personally, for MOAS to be possible, there has to be a ridiculous amount of these total return swaps, but that I think there are. Personally, I think that would be my ideal form of transaction. The reason is because I talked to some guys that used to be very, very big in the hedge fund game, and all of them said, I mean, all of them said the majority of their balance sheet would be completely off balance sheet, especially in like before 08. I mean, the majority of your balance sheet is completely untrackable. Let's say I use this example a lot, but these guys at they were a hedge fund in Connecticut. They would have 50 billion long, 50 billion short, and then 100 billion off balance sheet in these total return swaps. I mean, like literally, like that is the type of leverage that you play with because it's untrackable. It doesn't even show up on your balance sheet. It shows up on nothing. It's just two agreements between two different people. You call up your buddy at Goldman Sachs and you say, hey, let's put on a deal. You put on a deal. That's all it takes. So I would assume that there has to be a humongous amount of total return swaps. And therefore, if there is such a ginormous amount, we don't need the option volume. We just need one of those firms to go bust. But to kick that off, and because we don't know that, we do need to see these options for these current quarterly cycles, because that's what we can track.
Yeah, and like the fact that you can do so much off the balance sheet, like it completely trashes the idea of a balance. Like a balance sheet is supposed to reflect a snapshot in time of a firm's, financial positioning or whatever, right? And the fact that you can have these material things that exist off balance sheet, like that completely destroys the point of a balance sheet. Like, and here's the sick thing: it's all legal. Or
no, well, there's no one stopping you. Like, there's no regulation, and that's what matters. I mean, I would be doing the exact same thing. I don't pretend like you're any better. If you could make a ridiculous amount of money doing something off the balance sheet, I would do it too.
Yeah.
Any tips for choosing proper open interest for Jimmy? No. Or any other stocks? It gets really weird when you're doing some weird option strategies like iron condors, or let's just say like bear call spreads, just something that there's not a lot of open interest on already. But ideally, like just look at the OI, and let's say if you have the option to buy, like let's say a 130 call with an OI of on GME, maybe that's 10, but the 150 call, you can buy it and there's a like a 500 OI, you're always going to buy the 500 OI just because that is the only way you're really going to get filled at a decent price. It's only if you're really moving in volume. If you're only buying one call, it doesn't matter too much, but it might affect when you sell and when you buy the bid that you get actually filled on.
Yeah, I was trying to pull up a graph. Like I can't remember, I've seen it before, so I'm not going to waste time here. But like, if you think about OI, like if you see like a graph of it, that can give you like a visual representation. You see kind of what other people are buying, and so you might say, okay, well, listen, if I want to do like a YOLO play type thing, that would be buying like a 950 or whatever, right, for January, where you think it's going to move, and if I move, it's going to be really great or whatever, right? But you might say, okay, well, listen, there's like what 22, what did I say earlier? It's like 20,000 plus contracts at 950, but there's probably like 10 at like 920. I mean, like, so buy the 950,
Yeah.
in this particular situation, if that's what you want to do. But at the same time too, if you want, let's say maybe more conservative, like at the money place, let's say GME falls back down to 90 and you say, okay, well, so I want to go out to September or whatever, right? So you might say, okay, well, listen, I see some interest at 90, but there's a lot more interest at 100, and okay.
Yeah, like only, but like if you're looking like the S&P or anything like that, there's so much open interest on every single contract, doesn't matter too much. For less volatile or less OI stocks, you have to look a little more. So would you, absolutely. But there is one share that I'll never sell, just as an agreement. So would you take a government settlement? Yes, absolutely. I mean, that's like best case scenario.
So maybe the question is that would you take the first government settlement? Maybe that's a way to kind of frame that. And I guess you could make an argument too that like the Federal Reserve, like basically buying
it depends on what the price is.
Yeah. So I mean, like well, let's get to MOAS first in this regard.
Yeah, so. If MOAS happened and twice as many dollars would be printed as existed to cover liabilities, how would that affect the value of the dollar? That would only put a ton of dollars on a very small portion of people's balance sheets. And those people are going to be buying the super expensive things. So I think it would drive up the high class things, let's say like Ferraris or Lambos. I think it would drive up the price of these super expensive things, but I don't think it would have too much effect on the actual dollar, because the dollar has so much value because of all their dollar-denominated debt, and that's really not going to get rid of this dollar-denominated debt out there, and commodities are still going to be priced in dollars. It's not going to affect the dollar shortage too much. That is at least my case.
Oh, yeah, and the other thing too is just this, like I said, so you might have a bunch of like new buyers who become suddenly nouveau riche, but at the same time, you also have a lot of people who probably want to be...
Well, the caveat is unless then the Fed and government comes out with stimulus checks for everyone else, then that could affect the price of the dollar, because there would be a lot more dollars circulating. People would be buying goods offshore, giving more dollar liquidity to the entire financial system. What do you guys think about the possible Fed pause? What do you mean by that, Phil? Do you know?
Phil, if the way I kind of read the question is, I think back to that tweet that Gensler put out, like 2 or 3 months ago, saying, "Oh, by the way, the SEC has the discretion to freeze stock for 10 business days." Like that's kind of what I see in that regard. Um, I would say that I think regulators are going to step in. I don't think they can stop it, but I think from a regulator standpoint, they at least want to be perceived that they're trying. Now, whether they can actually do anything, that's a different story. Or they do anything material, I should say, that's a different story. But I think that, when this happens, there's going to be a lot of people who are going to be hurt, and they're going to be crying out. And well, anyways, yeah. So I think the regulators and the politicians will want to at least look like they're doing something, even if they're not actually functionally doing something. So I wouldn't be surprised at all to see that.
I was actually just talking to someone about this. I'm literally the one of the same guys that works at that was running that hedge fund. And so what happens to the swaps during a shared divvy? I mean, personally, I've not yet found someone that knows the answer to that, because that's the main question I want answered right now. I mean, I am assuming that in these contracts they are written that under any circumstance it will just kind of settle, but I don't know. I honestly, this is something that I cannot figure out, and I have yet to found on. I mean, ideally, it just seems like crystal clear that it just makes sense that it would just be like if you were holding a stock and there was a shared dividend split. But I honestly don't know.
Good question. Like,
that's the exact same question that I have right now that I don't know the answer to.
Yeah, good question.
Yeah. Oh yeah, pausing by Fed attempt to pause and hiking interest rates. No, I do not think there's a chance for that, just because, I mean, right now Powell sounds a lot like Volcker, even though his actions are a lot more like Bernanke, just because like we are very dovishly raising rates. I mean, if you really want to stomp inflation, I mean, we should be raising rates to like 7%. I mean, like it would be pretty easy if we're raising by 50 basis points, but they will continue to raise by 50 basis points until they get the inflation down. And I do think that is crystal clear. Like they are telling you that's what they're going to do, and I believe them. I do think they will continue to do that.
Okay, gotcha, Josh.
Yeah. I'm. Oh shit, we've already been on for an hour. Yeah. It looks like we'll end it here, fellas. I mean, thanks for everyone that has been in here. You guys are best. So, Justin, any last thoughts?
No, like I said, looking forward to next week. Don't forget Monday's off. So good. I think it is for Memorial Day, and we'll see where this goes.
Oh, we actually do have a funny story about Jay Powell. His hairline does not recede, but like we were talking to Joseph Wang, who worked at the Fed, and he was describing Powell as a very small and frail man, and I don't know why, but that puts a smile to my face every single time I think about him.
Jay Powell, yeah. Okay, Josh. Until next time, man.